Inventory management is the process of sourcing, storing, and selling inventory. Today we will be discussing how ESONICS Electronics, a company that sells televisions, manages their inventory. This company uses the Perpetual inventory system, which records every sale and purchase of inventory, allowing the accountant to provide a detailed report of the movement of the inventory. This system is suitable for ESONICS as it sells high-value items with low turnover rates, that is, televisions. As the business deals with transactions on a regular basis, documents are kept to keep track of them. This includes the debit memo or debit note, the credit note, invoices, receipts, and payment vouchers for cash payments. These transactions from the documents are then recorded into specialized journals. Today we'll be focusing on 42 inches TVs. The purchase of this product can be seen in the purchases journal here. The business has purchased 30 units at $25,500, 25 units at $22,500, and 32 units at $29,120. Next, we have the sales journal and the cash receipts journal, which records sales. The business has sold a total of 742 inches TV in May. Moving on to the Purchases Return Journal, the business has returned a total of 3 faulty televisions to their suppliers. From the Sales Returns Journal, we also know that the business has received 2 televisions returned. The business also donated one 42 inches TV to a retirement home. The stock take conducted at the end of the month reviewed 89 stock on hand, amounting to $78,740. A stock card is then prepared. ESONICS uses the identified cost method, which identifies a specific batch of stocks sold to customers as seen here. This method is used because televisions are easily identifiable and it ultimately gives a more accurate profit. The first step to prepare the stock card is to record the balance brought down, after which the transactions are entered according to their date. The stock card can be found in the stock ledger, which functions to keep a record of all stock transactions. From here, the stock card is recorded into the general ledger under the main account inventory control. Firstly, the balance brought down from the stock card is recorded into the debit side of the account. Next, the purchases are totaled up and put under CCA onto the debit side of the account, followed by the total of the credit sales return under COGS. After that, the transactions involving inventory out are recorded respectively into the credit side of the inventory control, which include all sales, donations, and even stock loss. The business follows the inventory valuation rule to value their inventory. It states that the inventory is priced at the lower value of cost price or NRV. This is based on 2 concepts. First of all, the prudence concept encourages accountants to be careful when dealing with uncertainties. This is to prevent overestimating the business's gains and to avoid overexpanding. Next is the historical cost concept, which states that assets should be recorded at cost price in the balance sheet. This concept too has the objective of not overestimating the asset value. In 2020, the COVID-19 pandemic has affected ESONICS inventory control. It should be noted that stocks have been accumulating due to low sales, which has incurred extra expenses, weakened cash flow, as well as other risks. As such, ESONICS has tried to reduce their selling price, increase cash discounts, as well as upselling, that is by providing free gifts. However, this gives them a lower gross profit. Moving on, the industry turnover ratio shows how many times a business has replaced their inventory. ESONICS inventory turnover ratio, calculated by the formula as shown, can be seen in the table below. It is unfortunate that it has been showing a decremental trend over the years. This could be due to overstocking on stagnant stocks, inefficient sales efforts, as well as new competition that hinders sales. This will lead to more storage costs and will weaken cash flow as well as threaten the business's sustainability. It is advisable that the business improves their marketing strategy, eliminates stagnant stocks, and encourage pre-ordering to have a more accurate forecast of customers' preferences. The Perpetual inventory system has helped ESONICS to sustain as a business. For starters, it actually detects stock outs before they occur, which is a situation where stocks run out. This is possible because every movement of inventory is recorded in detail. To put into perspective, the reorder level indicates when the firm has to acquire new stocks. If stock levels fall below that, there will be lost sales. This is the formula to calculate the reorder level. For ESONICS, the average demand of 10 units a day multiplied by the average lead time of 2 days gives us the reorder level of 20 units. This is the number of units which alerts ESONICS that orders have to be initiated to avoid losses. This way, there can be enough stocks to supply demands, increasing revenue and guaranteeing financial sustainability. The Perpetual inventory system also tells the owner what customers prefer. This is because the stock cut highlights slow-moving and popular stocks, which tells the business what to cut down on and what to acquire more. This system also reduces the amount of stock take needed. To conduct a stock take, the business has to halt operations for a day. Not only that, it is also extremely prone to mistakes, requires a huge amount of manpower and is time-consuming. As the stock cut already records every movement of the inventory, a physical stock take would not be necessary. However, it can still be conducted to identify stock loss or stock gain. As the amount of stock takes can be reduced, the business can operate on more days, thereby generating higher sales. The business can also cut down on expenses to hire manpower, which will give them more profit to help sustain the business. As such, there is no doubt that the Perpetual inventory system is beneficial for the business. And that's all for today. Thank you!